The Nasdaq just made a jump into crypto. They actually are requesting the SEC to approve something that would change stocks forever, change crypto forever. I want to go through that along with some big purchases of cryptocurrencies by some large companies today. And we'll have Tom Lee talking about Bitcoin and where it could go by the end of the year. Tom Lee, obviously one of the, I'd say, most well-respected analysts on Wall Street right now. And we have Michael Saylor as well talking today. Bitcoin's moving up a bit. The markets are looking good. Let's take a look at it. If you don't mind, hit subscribe so you can see future videos just like this. Also, there are crypto creators. They're getting kicked off of YouTube. So if you want to follow me somewhere else, I do have my Telegram linked underneath the video. It's free. It's super easy to sign up. Just like click it and then you're in the chat, right? So definitely check that out underneath the video. If you want to start trading, check out the link to BYDeFi. As I've been saying for the last year and a half or so, 2 years, coming up on 2 years now, it's a great time to trade. When I was talking about this, we were back all the way in, I think it was right around this level when I started talking about trading crypto using leverage 26,000. We've been able to trade for massive gains. Some of my positions are up 700%, 800%, and we've been able to time the market pretty well. I oftentimes put in low leverage long positions after big pullbacks. What do you know? We've had a pretty decent sized pullback recently. Now we have some momentum. So if you want to get in now before we make the next big move up to 130, 140,000, check out BYDeFi underneath the video. We just ran a competition. It might be done now. Yeah, you can see it's done now, but we are giving away $30,000 in this trading competition. So we're going to do more of these in the future. If you want to join, check out the link underneath the video. Now, Bitcoin's looking pretty good. It's 112,300, 112,400. Looks like we may be gaining some momentum, maybe a higher high on the way. Right? We recently hit a higher high back just a couple of days ago, 2-3 days ago, then came down a little bit, collecting some momentum or gaining some momentum now. We have seen some shorts liquidated today, 166 million versus just 83 million of long liquidations. Overall, it seems pretty likely that we're going to see a rate cut at the next meeting, which is next week. But we do have some important data coming out later this week, PPI and CPI, that will be kind of the final nail in the coffin. So be on the lookout for that. Massive purchases. Metaplanet has acquired 136 Bitcoin for $15.2 million, and they're spending $111,000 per Bitcoin. They've achieved a Bitcoin year-to-date yield of 487%. So they are starting to acquire a little bit slower. They were buying over 1,000 Bitcoin at a time at one point, but now it's slowed down, kind of like MicroStrategy. They're able to acquire more when the market's a little bit more excited. As the market pumps up, they can sell more shares and it can be absorbed by the market better. But still, they're acquiring now. Strategy acquired 1,955 Bitcoin for about $217 million. Now, where did they get the money? Well, they got about 11.6 million from a Strife at the money offering, 5.2 from a Strike at the money, and then 200 million from MSTR at the money, which some people don't like, but they still have a lot left available for issuance. They have $16 billion left. So it was approved, right? They have the ability to do this, and they're at a 1.7x. I think it makes sense to continue to acquire Bitcoin if they're at a 1.7x value to their net asset value. So we'll see if they continue to hit that at the money offering. Solana is being bought up by different companies as well. Ford Industries announces a $1.65 billion private placement in cash and stablecoins to launch a Sol treasury strategy. Now let's look at Solana today. Solana has actually shown a lot of strength recently. Even with Bitcoin recently falling 15% or so, Solana's at recent highs. Like, we haven't been higher for 6 months, 7 months. So it's actually showing a lot of strength. This is really the highest it's been since it hit its high, right? Since it hit its high, it just kind of went down right away. So yeah, it's looking pretty solid right now. A while ago, I was talking with Tyler Hill on a video on the channel, and Ethereum was racing up, and I said, I think people are just kind of discounting Solana right now. No one wants to hold Solana. It was right around, I want to say $170 at that point. And I said, I think Solana could be the trade right now. I opened a long position, and what do you know, it is up pretty significantly since then. The Nasdaq is filing with the SEC to allow tokenization and blockchain listing of stocks. Maybe not technically going all in, right? But they are trying to tokenize everything, right? BlackRock has said that as well. Larry Fink says that bonds and stocks are going to be accessible through the blockchain and that they're going to tokenize them. There are a lot of reasons why they want to do this, from the simplest reason just being that you can trade them more freely, more regularly, 24/7, to being able to make fractional shares a lot easier, to increasing liquidity so there are more fees generated, to governance. There are a lot of reasons for this, but I think this will bring stocks more into the 21st century. There have been some platforms that have tried to do this, allowing 24/7 trading on something like Robinhood. I believe that's what they have, or after market hour trading and that kind of thing, but it's not quite the same. So this will be interesting to see how long this takes, if the SEC drags their feet on this, or if, the power of the Nasdaq and BlackRock and Fidelity and all these different large institutions kind of get them to move a little bit faster. Tom Lee giving his thoughts on the market right now. Let me play this for you and we'll talk about it.
Lee, Fundstrat Global Advisors, Head of Research. Good morning to you. Want you to weigh in, if you could, on this debate we've been having, or I should say the debate maybe the White House is having over these jobs numbers and what it portends for the economy and therefore what it portends for the Fed.
We can see that Fed fund futures jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation, and therefore justifying actually one additional cut. So I think that makes sense to me, because we know inflation, and that August CPI gets reported this week, may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly.
And are you of the view 3 times this year, minimum?
Sense. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts, and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed responds to that. And if it does, it's going to be good news, because the bond market is going to take comfort from the Fed at recognizing the labor market's weakening.
Hey, Tom, even if the Fed cuts rates, it controls the short end, but not the long end. What do you anticipate happens on the longer end, and what do you think happens to the mortgage market, too, as a result?
The long end is something to wonder about, because we know globally, the 30-year especially.
So right here, they're talking about how even though the Fed controls what happens with the short end of the curve, basically like short-term interest rates, they don't necessarily control the mortgage market. That's more controlled by the bond market. So if institutions or investors think that the Fed's going to have to raise rates at some point, even if they're cutting rates at the time, the mortgage rates won't necessarily fall down.
Actually has crept up. And we know that the Fed and other central banks have acknowledged that monetary policy has a lot of influence up until 5-year. The correlation is 90%. But once you get into the 10-year, the bond market is making its own decisions about growth. That is something kind of troubling. But on the other hand, I think mortgage rates could come down sharply, because the spread between the 30-year mortgage and the 10-year is over 300 basis points. The 50-year average is around 160. So the Fed, if it begins to resume cutting and the bond market views that as essentially an easing trend, the 30-year mortgage could drop 150 basis points if the 10-year doesn't even move. That's a lot of easing for the housing market.
That is a big deal. And I know you're not an economist, but you have to have a view on where you think the economy is headed. If we get these Fed cuts and the economy, doesn't take a steep leg down, despite what we've seen with the jobs market, that's one thing. But if we get these cuts and you're also dealing with a slowing economy, potentially even a recession down the road, I mean, that's a completely different story. You looking at these Fed cuts as for good reasons, because we can do it and get away with it and it's going to improve the economy, or you looking at this and thinking, yeah, I worry about what comes on the other side?
I'm going to take the camp that I think that these cuts are actually going to be very constructive for the economy, because the 30-year mortgage is strangulating the economy. We know housing has slowed dramatically, but we also know that there's a lot of pent-up demand for housing. So it's a market that does need to be fixed in terms of easing sort of supply-demand conditions. And we also know that ISM, which is a measure of business confidence, has been below 50 for 31 months. It's the longest stretch since the ISM's ever been created. So I think business confidence recovers if the Fed starts to cut. And so the combination of easing mortgage rates, business confidence recovery, I think is kind of a broadening cycle. And actually, I think that's why small caps have been the second best performing group after Mag 7 over the last 8 weeks.
Tom, one of the things that Scott Besson said was he thinks that the economy is actually in better shape than we think, and that the jobs numbers are going to get better. How does that factor into your thinking, or does it?
I think on the margin, I'd agree with Treasury Secretary Besson's comments for two reasons. One, when we go through corporate earnings, we don't have any increase in comments from businesses saying business tapered off in July or August. So even though the labor market shows like it's deteriorated the last 2 months, business conditions haven't. In fact, even the Fed's beige book, most regions reported improving conditions. So that is one thing. And the second is we know the labor market undergoes a lot of revisions, and we get September's benchmark revisions. I think it may show that the job market's been weak all year. And in fact, maybe the last few months have actually been stable. So I think Treasury Secretary Besson is sort of correct to an extent.
Hey, Tom, Bitcoin, before we let you go, tell us what you think. We're at about $111,000. The upside, the downside from here?
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double, but that's also
almost
going to be
a double from here. Let's just hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think we, by Christmas time, effectively, we could be at 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation.
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish, and we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
Tom Lee, from your lips, thanks so much.
Okay, so a couple of really interesting things there. It sounds crazy to call for a 2x on Bitcoin right now, but when you look at the past, that's generally what's happened. We've had massive runs this time of year of the post-halving year. The other thing is, I agree with what he said there. A lot of people are bearish. Like, there are a lot of people that I know that are sitting on cash, sitting on significant amounts of cash, are not going all in, are not FOMOing in. You look at the last, how long is it since Bitcoin moved up to this point? I guess if you go back to the beginning of the year, we were at 108,000. Right? Not the exact beginning of the year, but you look at like the peak back here, or the mid of December, we were 107,000. So that means in 8 or 9, 10 months, we've gone up $5,000. So basically just chopping around, chopping down, big move up, back down. There have been times to make money, and if you use leverage or something, you could make significant amounts of money. But anyone that just like bought at the peak and has waited, you're up 5%. So well, if you do go back a year, we're still up like 70%, but 10 months, we're barely up. So I agree that the market's been largely just waiting for the Fed to cut rates, for more clarity on a couple different events like the tariffs and interest rates and the economy. If they're clearing events, if we start seeing rate cuts and the Fed's more dovish in general, people are going to go more risk on because they don't want to hold 30% of their portfolio in a 2% yielding bond. No, they want to go risk on. And that's what's going to take is something fundamentally to change, not some piece of news like, oh, Tesla bought another $100 million worth of Bitcoin again for the first time in years. Like the large institutions want to see something different economically or policy-wise from the Fed. That's going to be what brings billions and tens of billions of dollars to Bitcoin, gets them to buy into the theory that Bitcoin is under allocated to at $112,000, that they need to get a 4 or 5% allocation to this because it does have the ability to 2x. Now let's watch Michael Saylor as well. He was just talking on Squawk Box today too.
Check out price of Bitcoin this morning. The cryptocurrency up over 100% this year. Joining us right now is Bitcoin bull Michael Saylor, strategy executive chairman. You know him from MicroStrategy. People are still getting those names, figured out. So we had Tom Lee on the broadcast. I don't know if you saw this earlier today. And he effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, 217 million this morning?
217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yep.
Yeah, how crazy is that? People are talking about how Michael Saylor and MicroStrategy aren't buying that much anymore, but they literally just went out and bought, and this is still not like a very exciting buy from the market. They're not like super excited or amazed by how much they're buying, and it's almost what they bought initially. Like it took them a while to be able to get to buy that, and now it's just like a weekly buy.
Yeah.
And this was just a short week, 4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Stripe, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right, but just to understand it, if in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again, at what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
You mentioned that you bought $250 million this morning, or 217 million this morning as you walked in. What's your dollar cost average for what you've paid for Bitcoin?
About $73,000 a coin.
And I guess I wonder if you think Standard & Poor's or others, or if anybody has any sort of bias towards crypto still at this point, because the S&P 500 just came out with their decisions and they chose to go with Robinhood and AppLovin over strategy. And a lot of people were kind of surprised by that. The stock actually was down a little bit. Do you think that there is a bias at any of the indexes or any places that come through this against a company with a lot of Bitcoin in holdings?
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time. There's a digital transformation in the markets. This is a brand new novel concept. Every quarter, we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
Can we just go back to the preferred piece for just a moment?
Have you ever noticed that Michael Saylor is very diplomatic? Like, he is not trying to cause trouble. He's not out here calling out people, saying that they're out to get MicroStrategy or they're out to get Bitcoin or anything like that. Like, he's just positive. He's not mad at the Standard & Poor's for not including them. He's merging traditional finance with crypto in a way that he realizes that, the speed that some people expect within crypto isn't necessarily going to happen on the traditional side. So I've been really impressed with how he's approached this for a very long time.
Because I think people want to understand, what a leveraged bet this is, but you're suggesting that because it's preferred, it never comes due. How can it be that they never come due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's, practically speaking, possible to take your leverage beyond 20% to 30 or 40% even. But you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now, these sort of treasury companies that are emerging, SPACs and other things, that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first. So there's an explosion in the past 6 months.
Right, but I'm curious about some of these levered efforts that may be using actual debt, not preferred the way you are, and how you think about them in the marketplace.
Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds, they may do it with converts, they may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit. Companies like Metaplanet will probably issue preferred stocks. They'll do it in Japan, in a yen basis. Most other companies are just going to creep into this by building up their capital base, and they're not going to get into the business of issuing credit instruments backed by Bitcoin.
How much leverage do you have?
We have about, 11% of our Bitcoin holdings are bonds, so convertible bonds, and like another 9% are preferreds. Okay. So not that much. I mean, really, we have 73% $72 billion of Bitcoin. We have $8 billion of convertible bonds that will eventually equitize. More than half of them are already in the money.
Michael Saylor, I want to thank you. Appreciate it. You got there early. You got there. So far, so good.
Thank you.
We talked about this last week, but the fact that they're not being included in the S&P 500 yet, I think is bullish for how long the cycle goes on for, because it's not like every good piece of news is hitting at the same time and we're spiking up in price. People are bored. The RSI right now is at 50. So we're neutral at $112,000. So I don't see us falling down 50% or 60% because it's not like there's this house of cards being built right now. It's not like there are a lot of sketchy players that are buying Bitcoin and they're going to be forced to dump it at some point. A lot of them are, the biggest buyers over the last 2 years have been ETFs, and they're not levered at all. Of course, I want to hear your thoughts. If you do want to trade crypto, if you're bullish over the next 3 months and you realize that this is typically when it's been the best time to hold crypto over the 4-year cycle, this is the 3 months that always pays off huge. If you want to trade, of course, there's no guarantee that that's going to happen this cycle, but if you want to take that bet, there is a link to BYDeFi underneath the video. BTCC, BLOFIN, WEEX, BitUniX, they all allow you to trade with leverage and without KYCing, so you don't have to give out your personal information. The cool thing about BYDeFi is, though, we have that Telegram group underneath the video, and if you trade a significant amount, you can actually get connected to someone at BYDeFi. So if you have questions or concerns or anything like that, you can talk with them. Thank you so much. I appreciate it. I'll see you all soon.